my name is Claudio Stivelman. I am a Brazilian born. I live in Miami for 28 years almost. So I would say I'm lucky to have in my life lived in only these two wonderful cities, Rio and Miami. Thank you very much, all of you, to come to this real estate panel. We are going to go over the markets that most matters for Brazilians.
Sure. Welcome, everyone. Got a lovely afternoon. I'm glad the weather held out for us. I'm Jamaican, so the cold weather really gets to me after a while here in New York, so I'm starting to feel a little better now. So, the question is about what should Brazilian investors or Brazil-based investors think about and consider when they're investing or making property investments in New York. I'll start with probably something that's a little more dry, but is incredibly important, and it deals with the tax regime. So investors should be very aware of FIRPTA, which is the Foreign Investment in Real Estate Tax Act, enacted in 1980. The reason that's important is, as a Brazilian-based investor, there's not a tax treaty currently between the U.S. and Brazil, so it is subject to FIRPTA. And what that means is at the time after a property acquisition, when it comes time to sell, there is a withholding of about 15% of the value of the property. And that becomes a very punitive thing for investment models. So if you're modeling an investment and you haven't structured your investment correctly from a tax perspective, that's something that could weigh heavily on your decision process and whether a transaction is feasible. So that's something that's incredibly important. You should definitely start there, and that delves further into the type of construct that you're investing through. You may have heard of offshore feeder entities or setting up an entity offshore and then having a Delaware entity. This, again, gets into the dry area of tax and legal, but again, starting at that base level, very important. Without spending too much time, but I'd say the consideration really is tax first, structuring, get that legal framework and infrastructure in place. Then, lead with your expertise, within the property markets, and the way you avoid competing against the large property companies and the large private equity firms is to maybe stay more middle market, which in New York City is 75 million and under. In other markets, 75 million is considered monstrous. But again, that's the environment that we're in. There's a lot to play in that. And the residential side versus the commercial side, it's a much more residential market than people think. If you're walking around Manhattan later today or the next few days, if you pay attention to the type of properties that you see as you walk around, what ends up happening is you realize that most of the commercial properties are towards the center of the island. And as you move further to the outside, it turns residential. Literally from probably 6th Avenue over to Madison Avenue, and as you get into Lexington and on out, it's residential. And you see these walk-up buildings, 3 or 4 story walk-up buildings with retail on the bottom. There's well over 10,000 of those buildings in New York City. And that's an investable universe where you could own 20 or 30 buildings, and most average people on the street would never know.
Okay. So thank you, everybody. Sorry for that. Let me speak first about the office market. It's what we will say one cycle ahead of the industrial market. So we have a lot of the old stock as well in São Paulo, basically because of the strata ownership that we used to have in the 30s and 40s when the downtown area of São Paulo was developed. And that basically created the fact that you have strata ownership. It's hard to have everybody in agreement to refurbish, remodel a building so that it can attend the new necessities of the future occupiers. So the regions of office, they shift where you have available land. And how it has changed in the past 10 years, we had more presence of rates, which is delivering better stock qualities, owners owning the entire structure of the buildings, And we also have a more presence of international investors in our market, such as GTIS, Brookfield, that has improved the quality of the stock. So this has been a major change in our market, and has improved the structure, the quality of the stock, and also how we have landlords dealing more professionally with our clients that are the tenants there. And in the industrial, we're seeing that shift now. More investors in the industrial market delivering better quality stocks with higher floor to ceiling heights, better structure, cross docking. So that has changed and is helping the quality of the market. It is in office terms a very shallow market. We have about 12 million square meters. That would be 120 million square feet of stock, where 1/4 of that is Class A buildings. No. Yeah.
Hi, yeah. Good afternoon, everybody. Pleasure to be here, for sure. Before I jump into your question, just the data that is important that you guys have aware on how our market developed. So from 2002 to 2018, the REITs in Brazil, in 2002 we had 10 real estate funds worth $1 million, not even that. 2018, we'll have 375 real estate funds in Brazil that are worth more than 25 million. So that's, to Renato's point, right? It's a different market, it's a different landlord. Different landlords bring benchmark, different landlords bring different products. And linking to your question, it had a direct impact in our cycle. It was really tough to look back. I've been in the market for 15 years, but we have to do a little reading. So going 20 years back, it's lack of data and completely different economy, different the company size in Brazil, much smaller, and the office stock completely different, and also ownership structure completely different. So when you try to see and understand, study the cycle 20 years ago to now, it's completely different animals, right? So what we have been seeing with the cycle now, more concentrated in the real estate funds and professional developers, it's more synchronized. So what we learned is that they stop building buildings altogether when the crisis start threatening their their leasing activities, and they stay quiet for a while. They don't make a lot of money. They complain about Brazil all the time. They pretend they're gonna sell the buildings, but actually they buy more buildings. And when they start redeveloping their pipeline, and in São Paulo it can easily take you 4 to 5 years between approvals in City Hall and construct the company, and construct the building, sorry. So it's up to 4 or 5 years. And that's a challenge that majority of the international developers, they underestimate, right? So that's the importance to also, if you are an American or a European, foreigner investor in Brazil, to partnership with local platforms. So we have a lot of local platforms, real estate companies in Brazil, they don't have as much capital as outside, but they do have the expertise, they do know their ways to deal with the city hall and the city dynamics. So going back to the cycle is that everybody stops building at the same time, everybody starts constructing at the same time, so you have low vacancy to a moment, peaking the rental rates, and when the new development comes in, you have all of a sudden the vacancy rate, for instance, goes 4-5 times more, and then you have a decrease of price. So it's tough to do a reading on the real estate dynamics in Brazil. So whether the growth we're having is organic or whether the growth we're having is a sort of artificial, movement from developers to hold up and back up the project's delivery. So the point we are right now is we're coming across a more than 5 years crisis in Brazil. And it hit really hard the real estate market as a whole. Tenants giving up space, disposition, reducing their rents on a yearly basis, although our real estate law doesn't allow that. But it's either do that or either you lose the tenant, because the companies were shrinking. We had international banks that they completely disappeared from Brazilian market. So just for an example, Barclays used to occupy 50,000 square feet. Barclays currently occupies 2,500 square feet. So this, just to name one case, right? So the crisis was really bad. And now, with the new optimism that we have for new government, new reforms, structural reforms, I don't think we're going to have time to talk about our political, but in a general sense, Brazilians are more optimistic about what's happening, what will be, and it's a coincidence that the stock is right now really short, and we have low vacancy rate, rents are picking up again, but then again, it's hard to do the reading whether this market pickup comes from an organic growth from tenants and the economy itself, or if the growth just really coming because we have no new deliveries upcoming in the market for the next few years.
I want to make some other points here. The following: I've been in as a developer in Miami. As I told you, I'm there almost for 28 years and developing for almost 28 years. I feel that the cycles change a lot. But before, we used to have cycles like that. Now we have cycles like that. Because of the globalization, because of all the interaction that all over the world and the countries of the world, because of the more facility to travel, because of more easiness of communications, etc., information flies. So cycles go very quick. And in my business as a developer, and I develop office buildings, I develop houses, I develop luxury condos, it's been very tough lately, very tough. Because if you don't go in right in the beginning of a cycle, and you don't have a crystal ball, you have a nose, you can smell, but if you don't go in right in the beginning, in order to get out right at the end, you're screwed. You're screwed. You go in the middle, and you cannot sell it. And that's basically what happened in the biggest crisis of 2008, because this was a big fall, a big up to 2008 and a big fall.
And just to make a point to that, it is no coincidence that you have a major delivery of new stock of office in São Paulo when the crisis occurred. That happened in 2000, that happened in 2010, and that happened now in 2012 to 2015. In the middle of the crisis, everybody delivers at the same time, makes the vacancy rates go out the roof, and prices, rent prices go down significantly.
Absolutely.
So
absolutely.
The timing to deliver new property, and the lack of professional investors in the market that are looking on the long run to start acquiring land and constructing during the crisis to deliver in a better moment.
Yeah, but I'm also taking a ride on what Danielle said about everybody putting space together, everybody getting out. It's because the cycles are so short that more and more the developers are beginning to say, oh, now, good time. And also, again, specifically regarding Miami and different from Brazil, and I'm going to give you soon some data. We have data. I know exactly how many condos are available in the market, if I'm talking about the condo market. And I'm going to be more focused in condo market in Miami, different from them focusing more office and retail in New York or in Sao Paulo, Brazil. In general, but Sao Paulo, 85%. So, anyways, so you have data that can say there is an expectation that 2020 is going to begin a new cycle. So if I am, as a developer, having this expectation, that means that at the very end of 19 or the very beginning of 20, I might be beginning to buy land again. But maybe you and you and you and you and you too. And suddenly we have space to develop this X number of units that are going to come to the market as pre-sales. And maybe we have time to get out. But there's going to be again a high level of inventory, and then another cycle beginning again, and that's, I don't know how to get out of this.
So we were talking about how we go through cycles, and we went through a series of markets that are in different stages. So as an investor, this is universal. So the question is, when do you invest? Where are we in the cycle? How do we know? You can't try, and this is an old business mentor of mine, you can never try to just buy at the absolute bottom and sell at the absolute top. That's just next to impossible. But what you can do, and Robert Shiller, professor of economics at Yale, won the Nobel Prize for this, he talks about how psychology drives the markets.
Absolutely.
Capital flows. It's technology today, and the ability to see capital flows between countries and where investors are allocating money, that becomes a barometer. And what ends up happening is you can see at any given time, you don't need a PhD, you can drop yourself into any market. Take New York City, for example. Where are we in the market in New York City? Are we more towards the top or more towards the bottom? We're definitely more towards the top. So my old mentor used to tell me, when the market is on its way up and that's the sentiment, you should be looking to sell. Don't sell at the top, just look to sell when everything is going great. When the market is going towards the basement, towards the tank, sentiment is low, capital is fleeing, that's when you should be looking to buy. What ends up happening is if you're down here and you buy somewhere down here, and then you look to sell somewhere up here, you always have an investment margin. So that's just a way of connecting the dots of whether you're investing in Argentina or investing in the US. How do you make decisions? You have to get into the market, put your finger up. Where is the sentiment? What are investors doing? What's the attitude? Am I in a look to be selling environment, or am I in a look to be buying environment? And if it's extreme enough, you don't need that much of a strategy. You just need to buy.
The tenancy law is very strict in Brazil compared to other places in the world, compared to the United States. A very restricted law. How do you think that this is affecting you in the market now?
I would say that it's restricted to landlords and very flexible to tenants. What the real estate law, actually, funny thing is that our real estate law is named officially tenancy law. and it has a reason, because it protects tenants, and it should protect because the original idea was to protect, families, in their to leasing, renting their homes, right? But when the market evolved, instead of making a specific corporate real estate law, we actually we adapted the tenancy law to commercial real estate, and then that's when you get a non-safe place or doubtful place for investors, because you could ask me, do we have 5-10 years lease term in Brazil? Yes, we do. But tenants also get to have, and this is by law, they have an early termination, they have a break option. So you would think, from investor perspective, why would I ever finance? Why would I ever invest money in a building or in a contract when the tenant can simply give me a early notice and just give back the space? So that changed the structure of the lease, changed the structure and the dynamics of how you do business in Brazil.
We'd like to talk a little bit about the current stage in the condo market in New York.
Sure. The residential condo market in New York is definitely just a market of two worlds, we'll call it. The ultra high-end market, which is very visible in the city. You see these very skinny, super tall buildings on 57th, they call it Billionaires Row. Those buildings going up at astronomical numbers, and leading into this last cycle, which is extended for so long, you had flats and other units going for north of $10,000 per square foot, up to $15,000 per square foot, and trading, all manner of investors, domestic and international. What's required to deliver those type of units, obviously the cost per foot to build out a condo unit of that quality, and then the
You say
land,
$15,000?
$15,000.
I'm selling a tremendous luxury building in the ocean in Miami for $1,500. $1,500.
Yep.
Where was it,
It's-
15,000 Tribeca downtown, or?
That was 157 was one of them. There's 432 Park, which is right here. And there are a couple, there's one in 16 Central Park West.
Right. Sell all of them, buy 10 of mine.
So that side of the market has dramatically slowed down, to say the least, because the ability to trade those assets are no longer a certainty, and in many cases, developers who pro forma those numbers are, let's just say, in trouble. So the metric behind and what's driving this condo market is it is a supply-demand issue ultimately in our business. Supply-demand drives values and transaction activity, and you definitely have a constrained environment here in New York. There's a finite amount of land that you can develop. But in the condo market, you have this affordability issue. And affordable condos, there is scarcity now, and there's tremendous demand. So how does a developer deliver those units? And the answer is you have land, for example, trading at $500 per foot. So in order to construct a condominium with reasonable finishes, it doesn't have to be a 5-fixture luxury marble thing, but something of good quality, you could easily spend $750 to $1,000 per square foot in New York City. So that metric, we're at $1,500 a foot just to break even. And because it's going to take you 3 or 4 years to deliver that project, if you're going to generate a high teens type return, the simple metric that most condo developers used in this last cycle is you take your investment basis, which in our example here is $1,500 per square foot, and you double it. And that's what you would need to sell out your units to generate a reasonable return.
Just to put São Paulo in perspective compared to Hudson Yards, so the stock office that is coming up in the entire region, office stock, it's the same amount of what we have in São Paulo today for Class A space. Okay, so it's a new city. In São Paulo, we have 3 million square meters of Class A office space, and it's pretty much the same what's going to be the whole project in Hudson Yards. Actually, is bigger, almost there with São Paulo entire Class A space.
You talk to 35-year-olds and under, they don't want to own anything by themselves. They want to be mobile. They want to rent. So how you
That's
guys?
why I'm making a rental building.
Exactly. So how you guys? I don't know what I'm asking. I guess I want to just hear your comments back on where do you see this going as far as the supply on that type of product.
São Paulo, Brazil, or
New York. And São Paulo too. I know Vitacom is one example there.
So you can talk about the growing co-living environment in São Paulo as well.
But in São Paulo, Vitacom is
Yes.
the only one that is making anything toward that.
And basically a lot of uncertainty. So parallel to the real estate tenancy law in Brazil, also does not address the housing segment for short-term leases. So they don't want the millennials. They don't want to rent an apartment for 3 years. In Brazil, you have to do for at least 3 years. Landlords don't accept a lesser lease term. So if you lease for less than 3 years, the Brazilian law considers that rent as a vacation rent. So it goes to a different type of regulation and provides no protection whatsoever to the landlords. So that's why we can say the housing market, rent apartment for millennials in Brazil, São Paulo, maybe does not exist. Vitacom is trying to change. So I think in the next couple of years, if Vitacom pays attention to whatever Enoch is going to share now, they will probably get on their way. But unexisted market for that. You mentioned Lava Jato and the litigation, and what I can tell is that Lava Jato hit really hard the pension funds, right, from Petrobras, Banco do Brasil, and so on. These guys are massive landlord in our market, ownership-wise, and there is a sector in the government that regulates the pension funds, and they have just passed a new regulation. The pension funds were not happy, but they had to accept. And this will have a direct impact to your question, is that pension funds cannot in Brazil anymore invest in real estate directly. So they cannot buy assets, they cannot buy buildings. If they want to invest, if they want to keep their share in the real estate market, they have to go through the real estate investment trusts. So, and here comes a nice opportunity because, and for the whole market, for everybody in the market, because the real estate funds are really just waiting to buy back a few assets, right? Renovate them, repurpose them, because pension funds clearly don't do a nice job in that. So, and not only that, the real estate funds are really looking into the all capital that these pension funds have to invest. And this will be good for tenants, this will be good for the capital markets, and this is a nice opportunity for foreign capital to enter in Brazil. It's something that is not going to happen right now. They have a time frame of something between 10 to 15 years to adjust, but right now they're not buying, they're not selling, but they're definitely not going to buy anything. And mainly because of the Lava Jato. They proved that pension funds could not do well in managing their real estate portfolios. They could not be competitive as the real estate funds are. So we see, we have good expectations that Lava Jato brought to our market, real estate market.
Nice. 2:02, 2 minutes late. I'm sorry. Thank you so much for coming. Enoch, Renato, Danielle, thank you so much. I hope you enjoyed. Appreciate it.